Today on the Income Flip, I've got Justin Purpero. Did I get that right, Justin?
Yes, sir.
From Newport Beach, California. Welcome, Justin, to the Income Flip podcast.
I appreciate it. Thanks for having me.
Hey,
Looking
man,
forward
my
to it.
pleasure. My pleasure. So, as is customary on this podcast, I love to go deep and understand the entrepreneur's journey, right? Like you're in the business of lending to high net worth individuals, self-employed people, builders, developers, investors, like income structuring to make that happen. But, you know, how did you even get started in this wonderful world of real estate entrepreneurial? So,
Yeah, absolutely. So, I actually started out very young. Coming out of high school, I was kind of lost, trying to figure it out. Did a little bit of junior college, and just was struggling to, find my path. Shortly thereafter, trying a little junior college, I had a friend who was at USC, and he came down for the summer. I was maybe 19 years old, and he was 19 years old as well. And he made 300 grand during the summer of probably 2000, sorry, in 2000. So we were young
wow,
kids.
you were young.
Yeah, we were young. I was 19. My friend comes down, works for his father's mortgage company. At the time, it was subprime. It was negatively amortized loans, and it was just a shit show. And he was crushing. And I said, God, like I'm over here waiting tables. And at the end, he's like just like grinding for like 30, $40, in tips.
Yeah.
And here he is just trying, making 300 grand in a couple months. So, was really interested in that. Ended up getting my real estate license at the time because that's how you got certified to become a loan officer. And basically, I started from the ground up there. I was a young kid. I, worked in basically a shoe closet that was just a stack,
Smiling and dialing, like,
smiling and dialing.
yeah, yeah, yeah,
And
yeah.
I had the fortune to work for a company that had just nothing but killers, just aggressive, talent from the sales side. And so I spent my time literally, calling on a stack of what we call no sales. And that was basically leads that the other loan officers did not execute on. And through that process, literally picking up not a cell phone, but like literally a landline, sending out packages to clients through FedEx. Everything was done by hand, showing the benefit. It wasn't sent out through email. Email wasn't even really. I mean, it was around, but it wasn't how you communicated on a financial product like that at the time. So I'd say about a year into me just hitting the phones really hard, I became a loan officer and I did really well. Right? It was. We're starting to come into the 2003, 2004 range. I was making a lot of money.
Justin,
Um,
in the beginning, just to go back, were you taking those no sales and then just trying to revive them and then taking the lead and giving it to a loan officer? Was that
yeah, yeah, it's a great question. So
okay?
for a short period of time, because I did not know how to sell the actual mortgage, my role was to take that lead and bring it to a loan officer to pitch the deal.
Hmm.
Probably 6 months into that, I was able to start, finding the opportunity myself and start understanding how to speak to the customer and how to sell a refinance opportunity or a purchase transaction. And so I would say it took me 6 months to about a year at that point to really be up and running as a loan officer.
I love
But
it. So let's talk about some tactical things that you learned because I always love to mix in the tactical. So anybody listening, when you make that many calls, because I assume you made a lot of calls, right?
hundreds a
You
day.
probably learned two or three things that helped you with conversion. I'm curious, what were some of those things that you learned?
Just coming off the top of my head, I think never judge a lead by face value, right? Like we would look at these leads and they were basically at the time just kind of written out. There was scribble all over them. There was no benefit or turn down. There was a turn down based on the income or the credit. And so I would say that, the leads, a lead's a lead. And I think there's a lot of opportunity in leads. It's a matter of, timing. It's a matter of the right style of communication. And so you never know, what that lead can turn into, right? And so just like not judging a lead by just face value. I think a
Yeah.
lot of people want these perfect leads all the time, right?
Well, when a rep comes to you and says these leads aren't any good, you're like, no, 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 no. Your skill set isn't good. The leads are fine, right? It's a,
100%.
it's the law of averages, and then being able to communicate, like you said, right? You probably learned tonality in that process, pace, right? Matching, mirroring,
100%.
all that stuff. Like, how is it that you don't, I remember when I was making these calls, like, how do I get past the first 30 seconds was like the hard part, right? Like, if I could get past the first 30 seconds, right? So you can't sound like a salesperson, right? I often would like, I would act a little confused. Like, I'm not sure if I've got the right number. Is this Justin? Right?
Yep.
Right?
Yep.
Just like little things like that. And they're like, yeah, what's this about? Right? Now they've given you permission to say what it's about. But before, if you're like, hey, Justin, my name's Rob Chevez with XYZ Company. How are you today? Click.
Yeah, that first 30 seconds, as we all know, is crucial, right? The
Yeah.
tonality, how you're coming across. I mean, we all do it. Like when I get the right, like I'm getting telemarketed all the time, right? You're getting phone calls, but if someone's coming at me correctly, being a guy who's been on the phones, I'm speaking to you. I
Yeah.
want to hear what you're saying because you know that opening is just so important. So I would say, just judging the lead by face value. I think that there probably is no better skill set for anyone trying to enter the sales force than just picking up the phone and smiling and dialing for a substantial period of time. It was a game changer for me as I progressed later in my career. It's allowed me to open up doors that I didn't think were possible. And it's just where I think everyone should start, right? I mean, really is a crucial skill set.
Justin, so just because like I was getting started in my career during that time, doing the same thing, but recruiting tech salespeople. So I was in the tech side of that business, right? And I remember um, the tech business, what it did was there was a big boom in 2000. Then it started slowing down in 2001. Then it was a total implosion in the year uh, uh, 2002, right? It's like somebody turned off the spigot. But real estate was now hot and heavy, and you were now in the prime of your like career, right? I remember calling my friends that were loan officers and real estate agents. I'm like, guys, this thing could change. It could turn. And I remember getting laughed at by someone. They're like, dude, that like no, right? Like because they never experienced it before. I had just come through like this dot-com implosion, right? So I'm scared to ask you, right? Because like you had 5 years of essentially like learning this thing, and then it changed, right?
Right,
The
right.
business changed on you drastically. Like, so how did you survive that period, right? I would
It,
imagine by this time you're making a lot of money, and you making a lot of money is, you probably bought a house, or maybe you bought toys, or maybe you had. So let's walk through that
yeah,
whole thing.
yeah. So here we are. It's 2000, early 2007. Um, I'm newly engaged. I have several condos. I've got three vehicles, with big payments. I got the Escalade on the 24s. I got the Mercedes Benz. I'm taking care of my fiance at the time's car, and we were just living life, like, bottle service every weekend. I mean, I was a young guy, and I was also 1099. So, and I didn't realize, like, oh, you got to pay taxes on this, right? So I
Oh
was
yeah.
taking I was taking home everything, making a couple hundred grand a year at a young age, and here comes the mortgage meltdown. And I'll never forget. I literally was in a place where I was looking at my board that I had kept on the wall of all these transactions I had in process. And every time I turned around, one of these institutions that I had submitted the file with was closing down, like
Yeah.
literally in process, right? And so it was like whack-a-mole. You would literally take a file, you'd send it to an investor, they close down. I had one transaction, I'll never forget, that the client went to docs, meaning he was ready to sign. Loan docs are drawn. He goes and signs them, but before it funds, that institution, New Century, closed down. So I had to reboard this file 30
Oh
days
my
later,
goodness.
right? 30 days
Crazy.
later, I send it to Fremont at Loan Docs. Fremont closes down. So you got to imagine, I've got all these opportunities. Clients are engaged to proceed with me, but the institutions are closing down left and right. My bills are stacking up. I'm like freaking out. I had never had a problem getting mortgages done. Our clients engaged in wanting to proceed. The challenge was I couldn't find a home to close the mortgages, right?
Mm-hmm.
And so I literally, here's towards the end of 2007, I'm behind on my mortgage. Behind on my cars, and I'm getting married that February with my wife, right? And unfortunately, I had lied to her. I did not tell her anything that was going on just because I figured out, we'll figure this out. This is just a phase. These companies are going to, come back around. We're going to be able to do business, right? I was always very positive in my thinking, and I had the skill set to survive. And, long story short, I literally am losing everything. So end of 2007, I feel like I was literally one of the first people to have a short sale. Like I
Mm-hmm.
literally was applying for a short sale, and it wasn't in the news. Short sales and foreclosures were really happening in 2008, and here I
Mm-hmm.
am in 2007, like looking for how do I get out of this mortgage? Because at the time, what I did is I put little down. I went stated income on my mortgages,
Mm-hmm.
and I did what was called negatively amortized loans. That's meaning that
Mm-hmm.
your loan, because your payment was less than your actual interest payment, your balance actually increased. So I actually owed more than the property was worth. So for me, it was to
Mm-hmm.
walk away. It was a no brainer. But long story short, um, tell my fiance at the time. She sticks around, and I'll never forget her for that. It just shows her who she was. She could have left, and it was just a blessing that she just believed in me and just stuck around with me, even though we were just in a bad financial place. But I'll never forget, and I want to bring up this point. So at the time, Wachovia was doing negatively amortized loans, and you were making like 2 to 3 points on these transactions. And I happened to get this lead that came in for about $3 million transaction that I was going to make roughly about 90 grand on. All right. And from January till about March, I was working on this transaction. And literally, I had no money. I was literally like freaking out. And that transaction, after 3 months of work, I got done a week before Wachovia closed down. That gave me a little cushion to
A
then
runway.
to then go, okay, where is the high ground? 1 second.
Mm-hmm.
And that's what really created my journey of becoming a true mortgage professional, right? So here I am, losing everything, newly married, um, down to the fumes, but I closed this transaction, and I go, okay, where is the high ground? And I thought to myself, working for a bank is the high ground. At the time, the only stability in the markets for a loan officer was at the banking institutions. But at the time, they were not hiring anybody that was not college educated because it was a bank, right?
Mm-hmm.
And I literally cold called, and I had emailed first and cold called a sales manager at Chase. And I said, look, I'm going to come in and I'm going to be your top producing loan officer within 2 months. But I need you to give me a shot. I do not have a college education, but I'm an animal, and I'm gonna just outfund everybody. And luckily, they gave me a shot, and that allowed me to get my foot in the door at Chase. And from once I was at the bank, I realized that being here in Southern California, the opportunity was in jumbo financing. Right, I was getting
Mm-hmm.
paid based on the volume that I was closing with the bank, and so I said to myself, why not go after a larger loan and get paid more per transaction than a bunch of small transactions, right?
Mm-hmm.
It's the same amount of time. With that, as time progressed, I realized there was a different skill set involved. There was a different way of talking to a customer. Um, But yeah, that was a wild ride. At that time, literally the whole mortgage business imploded. And I started really quickly at Chase, starting to really do well. In fact, after 3 months, that same sales manager that hired me, I was outpacing her, and she had been at the company for years and was one of the top performers in the country for Chase. So,
Justin, thank you so much for sharing that journey, because I think so many people have to hear that. Somebody might be going through a season right now in their life, and there's so many learning lessons that you can pull from this, right? Like you were constantly searching. You were trying to figure out, like, what's the answer to this thing? I've got to keep moving forward. You didn't stand still. You were like, what's the high ground? Like,
Yep.
how can I make 100 phone calls to get a job, because I'm not, like, college educated. Like, I'm not going to stop. I'm not going to quit. I'm going to keep going. Right. And it would have been easy for you. And I'm sure you felt this way, like, as you say it now, just like in passing, but I'm sure there was sleepless nights, curled up in a ball, being like, what happened? How did this go so wrong so fast? Right. That is, like, many times the story of the entrepreneur, right? It's the person that doesn't quit. It's the person that figured out the way to pivot when friggin' life just punches you in the face hardcore.
Totally.
You had to tell your fiance, hey, this whole thing, like, I got this thing, like, and dude, that took some bravery, right? Because, I mean, what are you gonna do at that point? It's like, you're probably like, I lost everything. I might lose her. There's no other option. I've got to
Totally.
tell the truth, right? Like, so
Yeah.
I just want to honor the story, right? Like, when I heard the age you were and what you were doing, like, I knew that there was, because I lived through that whole world, right? Like,
Yeah. Yeah.
I know what that was. I was like, okay, like, let's see how he navigated this journey, right? Probably one of the hardest journeys for you to navigate, I would imagine.
Absolutely. It was a
Has
tough
has it
time.
have you had has it ever been harder than that for you, or was that, like, the roughest time?
That was probably the darkest time. I think the last several years in the mortgage business has been difficult for sure.
Hmm.
The difference between 2008 and what we've seen over the last couple of years is in 2008, there was still a lot of demand. Um, there was demand from the consumer, right? They were
Hmm.
looking for ways to save money, they were looking for ways to pull out cash. And so there was lots of people to have conversations with. Um,
Yeah, the transaction volume has gone down so much, right? Like, that's the
well,
everybody's stuck.
yeah, well, what maybe some of the people that are watching this don't understand is that, in 2001 or 2020, 2021, we saw rates at all-time lows. We were offering 30-year fixed rates at 2.875% or below. And what changed was in 2020, we literally went from, a low 3% 30-year fixed mortgage to, 9 months later, towards the end of 22, close to 8% money. The demand for purchase, for refi, dropped dramatically. And the consumer was just there was no one to, I mean, transactions just came to a halt. So, someone like myself who's been a top performer my whole career, even, from 2008 to 2022, I mean, it was just a growth trajectory like this, right?
Hmm.
And then the next year, refi opportunities are down 90%. Purchase
Hmm.
transactions are down 60%. I mean, we're talking about a dramatic decline in opportunity. But yeah, I mean but I would tell you that because of what I faced when I was a younger kid, I was more prepared for something
Hmm.
like this to happen. I had different skill sets at that point, and so it just allowed me to kind of frame it differently, I would say.
Yeah, it's interesting because I had a friend of mine that owns a title company, and he said, "Oh yeah, Rob, this has been way worse than it was 2008." And I was like, "Really?" He's like, "Yeah, like in 2008, we were processing all the mortgages for the banks, so we were still, like, there was all these transfers that just had to happen because of all the foreclosures, which created all this, like, churn and
Momentum.
volume, right?"
Yeah,
And he's like, this has been brutal, right?
yeah.
And people don't fully understand. And the people are locked in, like, I mean, a 3% mortgage, 3.5% mortgage, and they're like, yeah, I'm not going to move. Like, it's free money, right?
Yeah.
And I'm kicking myself because I knew I buy a lot of real estate, Justin, right?
Right.
And I was like, man, like rates are really low, and they've been artificially low for a long time. And I bought, but I should have just been like, I was like, at some point this script is gonna flip, because it always flips, right?
It
Like,
does.
it always flips. I'm like, the script's gonna flip. But I remember it just being like a thought in my head, but not a real strategy, not a real like, hey, this script's gonna flip, so I better go buy as much as I possibly can.
Right.
So for those listening, know that, things always change, right? Like the things always swing. And so you just got to figure out, where's the money moving? What's the opportunity? How do you keep moving, right? Well,
Yeah,
Justin,
I agree.
how have you navigated then this market? Like, what one of the things that was appealing to me to bring you onto the podcast was that you serve this niche that I absolutely love, which is the entrepreneur, right? Like the business owner that goes out there, risks it all, doesn't have a salary, right? And typically they have more than one venture, right? Because they're like, they've got one core venture, then they got all these other side things that they're doing, right? How do you help somebody like that, right? How do you help the listener?
Yeah, absolutely. So, you know, my time starting at the bank in early 2008 and really focusing on jumbo financing, especially here in Orange County, the opportunity was really clear that it was entrepreneurs and self-employed, and this jumbo financing was the niche to understand. So here I am from 2008 till 2022, when I literally was working for banks, really focused on self-employed jumbo clientele. I had seen it all at that point, right? So I had worked with every different scenario under the sun. I was working with clients that had, you know, 15 different entities and, phone book size tax returns that I had to have me and my team analyze and then get through the system at banks when the box at the bank was very small. And so my whole time, this was the skill set that I had created. But where I had made a shift is when I went from a W-2 wage earner myself and went self-employed. See, because I opened in 2015, I opened up Loanpro. Me and my partner did, but we had been working for the big banks, making a lot of money. At the time, it didn't make sense for us to leave and go to the wholesale channel, the broker world, to start being an entrepreneur, because we were doing jumbo financing, and frankly, there was not a secondary market. Being a broker, you were just not going to compete in this marketplace. What's happened since then is in 2022 and shortly there before that, we started seeing this new opportunity come about, what was called non-qualified mortgages. These were new ways of alternate documentation for self-employed and real estate investors. It was using items like profit and losses to qualify, just profit and losses to qualify. Maybe your business bank statements, or even going with just a CPA letter. There was this new emergence of self-employed opportunities when it comes to financing that the banks were not servicing. The banks, you go to a bank, you get qualified based on what you pay taxes on. And as an entrepreneur, we all know that one of the benefits of being an entrepreneur is all the opportunities to write off different expenses and have pass-throughs, as well as different entities, to really just take your tax exposure down. So when I went full-time at Loanpro, me and my partner were really clear, like, this skill set we had created for years. This was an upcoming emerging product set of this non-qualified mortgage. And so we just went all in, and we're super focused on really working with entrepreneurs to find solutions that they are not going to find at a bank. And I think that the entrepreneur, their first thing is to go with the bank that they have their accounts with, right? And unfortunately, even with millions of dollars in the bank, as an entrepreneur, if you do not show the proper income to qualify, they will not give you a loan. They have strict rules and guidelines that they have to face. And if you don't fit that box, they will decline your file. So being here in Newport Beach, being here in a high net worth, environment, we are the go-to for luxury financing, self-employed financing. And so we've really just honed in on that niche. And so there's a lot of different creative ways. And it's the exciting thing is, as we're seeing it, is there's more and more products. The rate difference between going full documentation and going with this alternative documentation is starting to really to even out, right? And so it's just a really attractive and exciting space, and we're leading the charge.
What are you seeing? What's your crystal ball tell you, right? Over the next 12 to 24 months, how are you positioning yourself? What do you think might happen? What's the tea leaves? I mean, you've been in the business a long time, so you probably have some thoughts, and I'd love to get your thoughts to share with the audience.
Yeah, I think a couple points that I'm just, really focused on is AI. I mean, AI is changing the world. I've been looking into AI for some time. I feel like I was an early adopter, and it's allowed me to now be able to utilize AI at a very, high capacity. I mean, I literally have it helping me all day long. And I think that as I look at where Loanpro is at and where we're going, AI is going to be a key component of that. Whether it's, how we communicate, but it's also how we market, how we have the process, the customer service, the workflows. And so AI is really big. I think it's going to be, I think it's going to change real estate forever. I think that unfortunately, I think that we all have a small window in real estate sales and in the mortgage business to not be overtaken by really this new wave of AI that's coming through. I think it's going to take a lot of jobs away. I don't know. I think there will be a way for it to be balanced set with other opportunities, but so AI is a big focus. I do think that. Good.
Yeah, I was gonna say, Justin, I agree with you, right? Like I agree with you. It's and so as you're building your company, right? Like you start thinking, okay, well, how do I decrease cost in my operations, right? How do I streamline this thing? I've started sampling and beta testing lead generation services through it, right? Customer service through it, transaction management through it, like a lot. And you realize there's a day where it'll just all be handled by AI, right? And so, maybe you'll still need a fiduciary for a time being that's like gonna give you like all the creative, like, hey, this is where you go because you're just so knowledgeable, right? But eventually that might even go away, right? Because it'll be able to, the AI will know, especially in the mortgage business, I'm thinking it'll know exactly all the best loan products for that person's particular situation, right?
Yeah.
It will analyze everything about you and then say, here are your three options, or here's your one option, or here's your best option, right? So so how are you protecting yourself in that?
I mean, so a couple things. I think that AI has gotten a lot of attention in the media, but I think that we're really early in this process. And I think entrepreneurs who are building a company or thinking about building a company, they've got a real opportunity here to build out technology and processes in their company that are connected to AI that'll make their company more valuable and more efficient. And I think just diving into that right now is something that's really important. One of the ways that we are building large language models where we are uploading guidelines, marketing, conversations with customers into these AIs to understand how the consumer thinks based on that conversation that we just had as it's being recorded. what would be the best products based on all the different investors that we work with. So just finding efficiencies, right, and building these large language models within our company so that we can have control over the AI and how we can utilize it in the future. And I think that as we look to build and grow Loanpro, I think we're going to have a real competitive advantage and really a high value opportunity for being acquired in the future because we're just early in it and it's a focus of ours at Loanpro.com.
Good for you. Yeah,
So
I agree. I'm thinking the same thing, man. Thinking the same thing. So I cut you off. Like, so AI, big thing, as you look into your crystal ball for what you're doing. But what else? What about, what else are you seeing out there, right? What do you think about rates? What do you think about, what's the next 2-3 years look like?
yeah, I think this administration is really focused on bringing rates down, right? I think rates will really kickstart this economy in the right direction. The bond market's been really choppy. The tariffs have put a lot of uncertainty in the markets, but we're seeing some reprieve over the last couple of days. About 2 weeks ago was an unbelievable period of time. We saw just major volatility, and it's been hard, right? You've got clients who are interested. The week before they go to submit the application, the rates are completely different. So I think that we're going to see it a little choppy for the next couple of months. But I think towards the end of the year, we're going to see rates start coming down. And I think we're going to have a little bit of a trend there for the next 12 to 24 months. And I think it's going to be a really great opportunity. I think the buyers who go to market taking a higher rate and not having as much competition are really going to be in the right position for equity growth, because I think what's going to happen is I do believe that values will increase as rates drop because there's going to be more demand, right? There's so many buyers sitting on the sideline for rates to come down that I believe that that pent up demand is really unknown. I can tell you from being on the ground and kind of really feeling it when the media gets on TV, it starts talking about rates dropping. I can see an overwhelming demand from consumers. My clients are calling me, they're texting me, that there's activity. And I think that we're going to get into a cycle where there's going to be 3-4 months of continuous media hype on rates. That is going to really get the juices flowing, and I think demand's going to surge, pushing values higher. That's my take.
I agree. I agree that the same thing. I mean, remember, everything just swings, right? It swung one way really far. It'll swing the other way. And so it's, where are you in the cycle, and can you capitalize? Can you put yourself in the right position when things do change, right? So if you're listening to that, awesome. What's the future of Loanpro? Are you guys expanding all over the country? Are you going to stay in California? What does that look like? What's the bigger vision?
We have licensing in 7 different states right now. Some of the major kind of luxury markets, Florida, Colorado, Tennessee, like where jumbo financing is more of a opportunity. Our real plan of attack right now is really hyper focused on owning and dominating Orange County. As we continue to grow, it's really moving into these different markets across the nation. I would say that our focus, being as niche as we are, which is working with self-employed real estate investors, entrepreneurs, and luxury financing, we want to be the leader in the space. There are a couple players that play into this, but I think what you'll find with Loanpro in the near future is that we're going to continue to hone in on that. We're going to continue to bring a lot of value to the marketplace with content, with videos, with different workbooks, and really be a source for customers that do have unique situations, that know that they're going to be working with a true loan pro, 20 years in the business, experience with these type of clientele, and having solutions for them. I believe that we really serve a niche that is underserved. We're going to just lean right into that. And I think as entrepreneurism is increasing, and remote workers and just like the world is kind of going into the self-employed kind of
Yeah.
vibe and feel, and we just think that though everyone does it, a little bit, the banks can handle it a little bit, maybe the broker next door, but we are the best in the country. We truly believe that. We feel like we're second to none when it comes to these kind of clients. And just, I think our product offering as well as our rates they're very competitive. We tend to, we look at the lifetime opportunity of a client. We're not looking at the one-time pop. And I think that's the difference for us. Me and my partner coming from banks, we're used to like giving great fair deals without looking at like a one-time, charging 2 points or making 2 points on a transaction. If we can make 100 basis points or 1 point on a transaction, we're happy. And I think that it serves our customer well, allowing us to have really attractive rates and terms. And just, again, we're all about serving our customer and being very transparent in how we do business.
Yeah, what I love about that, by the way, just thinking about it, that there's this concept that I teach all of our teams, and I call it the zone selling system, right? It's like really it comes down to like picking the niche, picking the avatar that you want to be the superhero to. Those are the words of Dan Sullivan, right? Like, who do you want to be the superhero to?
Right.
And then just going all in, like cutting off anybody else, just going all in and saying, okay, this is who we're going to serve at the highest level. So whether it's building a community of entrepreneurs, like building content for entrepreneurs, like just, in my, it's one of the reasons why I built Grid, right? It's like, it's honoring the entrepreneur. For me, it's honoring the real estate entrepreneur, right? Because that's who we are and that's who we serve, right? But I do love all entrepreneurs. It's just like our world is all about, whether you're in construction or you're in property management or you're a loan officer, you're a hard money lender, like title, more like we touch so much in the world of being a real estate entrepreneur that I'm like, that's our niche within the niche, right?
Right.
And so I honor that, man. I love that, right? So we call it zoning a market, and then going super deep, right? Like, you zero in on the target market, own the mind share of that market, nurture and grow your database, and then expand and grow. And, so I honor that.
I think a lot of entrepreneurs don't niche down enough, right? And I think that's a challenge. And as soon as we focused in on that, I mean, man, it's just, we're attracting the right clients that we want to work with. We are seeing more opportunity than ever because of that. And, it sets you apart in the marketplace.
Yeah.
And I think that we all can find something that just feels right to us that we go after. And because of that, you attract more, right? And so
Yeah.
It's been a game changer to Loanpro, and it's been our focus really from the inception was to go work with self-employed, high net worth clientele. But I tell you that though it was our focus, we did not put enough energy and clarity with our message up until about a year ago, when it was like, we got to go, like, though we say this and we talk to our partners about this, our website needs to talk about it. Our
That's right.
messages, everything needs to say this only, and this is my focus. So that's been the game changer, is like literally like I can do the vanilla conforming loan, conventional loan, FHA, VA. Everyone can do that. But it takes a real pro to work on self-employed, high net worth individuals and know how to speak to them, know how to service them, know how to work with them when it comes to their documents. So we have just gone all in on our marketing, all in on our branding, and it's been a game changer. So,
well, with that, Justin, thank you so much for being part of the Income Flip. Guys, there was a lot of golden nuggets in this conversation. Hope you got as much out of it as I got out of it. Justin, thanks so much for joining.
Hey, my pleasure, brother. Thank you for having me.